How's everyone doing today? Shankar Puri here. Today we're going to look at the markets and see exactly what's going on with Bitcoin, the S&P 500, and kind of gauge of where we're going to be heading in the future. So without further ado, guys, let's dive right into the charts. All right, guys. So right now we're looking at the S&P 500, and currently we have, like I've been saying in the last videos, we have been past the lowest point in the market and we're heading higher, looking for a price discovery, blue sky, for the markets to really rally again and have that exponential move up again into the market, right? So that's kind of what we've been looking for and anticipating. So if you've been watching, you've been DCAing into these on these dips as we've made this higher low. As we made this higher low back in December of 2022, we did say it was a time to start getting back into the market. Now, it's okay if you haven't gone to the market, because where a lot of the gains are going to be made is actually in this area, because currently the price is we still have resistance levels. So currently we're looking at this resistance level right here to see how the price will fluctuate. So you could have, what we're looking at is the price to come up here and then consolidate before heading higher, right? So that's definitely what could happen. So DCing in, if you're gonna DCA in, or if you're trying to time the market, normally you would not enter on resistance levels, would either wait for the price to break above, have a pullback, and then get in on that side of the market, right? Or if we get rejected, would get in down here. But if we actually zoom in into the S&P chart, so let's zoom actually closer in just to kind of see more detail. So today, what it's looking like is we have this support area, and then as well as this is considered as a demand zone. Yeah, so this is a zone right here, so you can see the price pushed up, as well as we are on this resistance, which is now support. So the price at the moment is looking like we're looking to break these highs on the 1 hour, right? So we're looking to break these highs to see exactly, what's going on. But as for today, we're kind of looking right here, right, in this range. Okay, so that's really for the S&P 500. If we look at the 200 moving average and the 50-day moving average, we'll look at the 50-day and the 200-day. We can see that we have the 200-day underneath the 50-day. 50-day is above the 200-day, but not just that, the price is above both of those moving averages on the daily time frame. And many people, investors, long-term investors, look at the 50-day and the 200-day to see if we're in a bull market or a bear market. And a lot of individuals categorize a bull market wherein the price is above the moving average, the 200-day moving average, the 50-day and the 200-day. So the 50-day is above the 200-day moving average, which we have both of those right now. So we have been in a bull market, as well as we've broken this trend line here, right? So, and we've been watching and monitoring this, and been calling this whole year that we are not in a bear market, right? Many people see, the thing is, when a business unwinds or you have failure in business, it takes about 4 years to get out of that situation, right? It will take, so that's why a recession feels like 4 years or 2 years, but it's not that a recession is actually 2 years or 3 years. It's when your business fails, to exit that business, it's going to take you about 2 to 3 years to exit and reconcile. It could even take longer, right? But the bottom of the market is just, it's not that long. It doesn't last for that long, right? So we had the bottom right here, and the price is now rallying up. Now, once we get up to this area, we will see if we get a rejection further down. But as I see it right now, the market is looking very strong. And if we look at our Bitcoin chart here, you can see that we've been making higher highs, higher lows. So this is the BLX. So we have the BLX we're looking at. And like I've said, we are still in the smart money accumulation. We're in the smart money accumulation area, just like this in 2019, 2020. So you do still have time to buy altcoins and Bitcoin, but this is where smart money is accumulating. And what has happened is we've made higher lows, right? We've made higher lows. And if we go onto the live Bitcoin chart, at this moment, we've made higher lows, but we're just getting rejected at this area, which would make sense because this area was very significant in the 2020-2021 bull market. This area is very significant. You can see that over here. It was support. Not just that, over here it got rejected very quickly as it was trying to break above. We had a nice rejection. And so yeah, so right now it would make sense for the price to be getting rejected. So if you were buying up here, don't be too discouraged if you're down on your portfolio, but you want to be cognizant that you are buying into a strong rejection zone. So keep that in mind, that the safer areas to purchase safer area to purchase would be if the price comes down to this area down here, right? So if the price comes down here, this would be a safer area to purchase. And if we actually zoom in onto the 1 hour chart of Bitcoin to get some more detail, we can see that the price is still breaking down. The price is still breaking down. We've broken this resistance area, support area, strong volume candles. So when you have a break of a support or resistance and you have a strong volume candle, this indicates to me that, okay, we're going to keep on heading down. And not only that, you know, these are supports that we've broken right here. So the price looks like it's a lot weaker at the moment. So I wouldn't, you know, I'd wait to see some type of reversal before I start DCing back into Bitcoin, if you were planning on doing that, right? Okay. But you could always DCA into Bitcoin as we are in the accumulation phase of the cycle for Bitcoin. So now, today we're going to look at the DXY. And the reason why we're looking at the DXY, so we have this on the weekly time frame. But the reason why we're looking at the DXY is because it broke a key support area. And like I was saying in the videos before, if we replay this, go back here, what it looked like was that the DXY was just retesting a support area and looking to head higher. However, what actually ended up happening is we broke through, and now it looks, the DXY is weak. It looks weak, right? It's looking weaker. And yeah, you can see that we broke down with a lot of volume. So this is good for Bitcoin, and this is good for as well as risk on assets, because it shows that money is flowing out of the dollar into you know, more risk on assets, right? So whenever, I wouldn't say whenever, but the likelihood of money flowing into stocks, real estate, cryptocurrencies, there's a higher probability of that happening when the DXY is having a pullback, right? So if we actually overlay Bitcoin, let's overlay Bitcoin. So you can see here, again, it's not 100% correlation. Nothing is ever 100%, but you can see in this area here, the DXY 2020 of March was flushing down, and at the same time, Bitcoin did start to have a rally up, right, for the bull market. And as well as if we look over here in 2017, when the DXY was coming down, I'm gonna have to bring on the BLX. New price scale. Yeah, so same thing over here. When the DXY was coming down, the dollar was weakening. What happened? Bitcoin started pumping like crazy, right? Started pumping all the way from, I think it was like $60 to 20,000, right? So that's exactly what happened with Bitcoin there. So even though it's not 100% correlation, this is a good sign for risk on assets when the DXY is getting weaker, because it does show us that there's a higher possibility for money to flow into stocks, crypto, other investments, and that people maybe are not as fearful. Same with the TLT. So as well with the TLT here, you can see we've been tracking it. And whenever the TLT is heading lower, that is also good for risk on assets, because it shows us that when bonds are going up, it shows us that people are scared. They're not investing on risk on assets. So this is an indicator for us to say, okay, risk on assets, people are investing in it right now. The bonds are going down, so that indicates to us that people are not as fearful as they previously were. So when COVID-19 happened over here, what happened? The bonds, people invested heavily into the bonds, right? So COVID-19, this was 2018, and then this is 2019 right here. This was COVID was announced, and the bonds shot up like crazy, right? And then things started coming down, and this is when Bitcoin rallied. So we'll overlay it as well. BLX, new price scale. Yep. So you can see so we topped here with we topped over here with the TLT, and as we topped over there, we did also have a bottom in Bitcoin in this similar area, right? So we had this massive sell-off as the bonds were rising up heavily, and then Bitcoin started rallying like crazy as the TLT started declining, right? So that's just something to keep in mind, is that the bonds are looking weaker, and because of that indicates to us that risk on assets are definitely in play right now, right? People are investing in risk on assets. Though the prices are moving exponentially, it is an indicator to us that smart money is getting into, back into the market. They're already in the market, guys. They are back in the market, already in the market. And it is what it is. They have been back in the market. Okay, so now let's look at total 2 and see how altcoins are performing. So altcoins at the moment, so the total 2 is all the market cap of all cryptocurrencies except Bitcoin. And as we can see here, there's no rush at the moment to invest in altcoins. It's really just consolidating. And if we really want to be honest with ourselves, most altcoins that are going to be performing exponentially well have not even been released yet, right? So you want to get into altcoins that are new, because the next generation of investors and new individuals who are investing, they're the ones that are going to be driving up the price. They're the ones that are going to be talking about certain cryptocurrencies, and it's normally going to be the new ones. Yes, you can talk about XRP and Ethereum, and they're going to perform well, but it's always the coins that have the highest hype factor and that are very new. Doesn't mean they're going to be around at all 2 years prior to the bull market, but during that time you can capture the most amount of money during that cycle is with new cryptocurrency. So at the moment, I'm not too concerned with buying any type of altcoins at the moment. We are waiting for the Bitcoin halving, but you can see that a lot, Ethereum, Bitcoin, they're at the resistances. So even right now, altcoins are probably not doing as well because we just hit a resistance, right? And if we look at the Bitcoin dominance, it's actually coming down. So this is actually a positive sign for altcoins as well. So yeah, the Bitcoin dominance is flushing down a bit. So that is good for altcoins. But at the same time, the Bitcoin dominance is on a overall uptrend, making higher highs and higher lows. This would be the first time that I've seen some sort of weakness in the Bitcoin dominance. Is this right here? So what we're actually we'll pay attention to is how the price reacts in this area, and if we break underneath this will be even better for altcoins, because as the Bitcoin dominance comes down, there's a higher probability that people are going to be investing into altcoins. It's either that or people are pulling money out of the cryptocurrency market altogether. So yeah, that's really all there is for today, guys. Please understand, trade safe, manage your risk, and also be kind to yourself. These markets aren't going anywhere, and when the markets do pick up again, a lot of individuals are gonna, the social media is gonna be flooded with stocks and crypto, and people are gonna be making millions overnight, right? But just understand that this is a journey that takes time, and remember, who you're becoming during that process is what matters the most. So don't get discouraged. Money and abundance and wealth is just a byproduct of who you are. So it's kind of inevitable, if you keep working on yourself and who you're meant to become, that you're gonna receive it. But right now, everything's quiet. The market's quiet. People are not investing as much. They're not looking at the market. A lot of individuals that I was talking to in 2021, they've left the market. They have no idea what's going on, and that's okay. But remember that if you're still here learning, figuring out how the market actually works, you're going to be ahead of everyone else, and you're really going to have that edge to take you to the next level when the markets do turn around, right? So just keep all of that in mind. Understand it is a process, and to become who you need to become, there's a lot of pain that's involved to kind of strip away who you're not supposed to be and create who you are supposed to be for whatever you're trying to achieve. So enjoy, have a good day, tune in next time, and we'll see you in the next video. And if there's any cryptocurrencies, altcoins, even stocks you wanted me to go over technical and look at it as a technical standpoint, or even if the tokenomics of a certain cryptocurrency and what I thought about it, I'm more than willing to look it over and give you analysis in the videos. All right, take care.